Everyone's talking about oil again, but what if the real energy boom isn't oil at all? What if the biggest opportunity in energy right now is the one hardly anyone is discussing? And the best part, stocks in this space are low enough for major upside. We break down what it is and give you 8 of the best ASX stock plays to put on your watch list as the brains trust behind Australia's leading government accredited share trading education and market insight that is regularly called upon by major media outlets. We'll show you the professional stock market playbook that actually works. I'm Philip Tortevsky, joined by senior analyst Janine Cox and Zoran Kresovic, and we are Wealth Within. Good evening.
Good evening.
Nice to have you back, Janine.
Thank you.
Thank you, and nice to have you on, Zoran. Welcome, mate.
Thank you.
I thought you left us for a few months. Yeah, you're looking good.
I'm back.
Fresh, tan. Yeah. Nice, great.
Been doing his Bikram yoga.
That's right.
Yep.
A lot of exercise.
All right, now we're going to get into some amazing stuff. Hopefully that is better than the jokes, but let's dive right in. Turn on any major media and the talk is oil right now, yet we're seeing countries like Japan, India, Malaysia quietly locking in long-term natural gas contracts. We're also seeing multiple outlook forecasts that Asia's liquefied natural gas imports, particularly from China and India, will rise in 2026, with forecasts ranging from 4 to 7% growth. And Europe is also projected to import record levels of liquefied natural gas in 2026. Now, the question is why gas now, and is everyone missing something focusing mainly on oil? Janine, I want to ask you, because really it's all been oil, geopolitical risk, war, but quietly these governments are locking in 10, 20-year deals with natural gas. How come?
Well, the threat of war is always there, and that causes price spikes, so they're just preparing for future consequences of the current situation around the world. And I think too that if you look at what happens in the energy space, that we see this cycle of things, and it's always a similar sort of thing. You see gold go, you see silver follow, and then you see oil go, and then you see gas follow. Often that's a situation that happens over time.
Does part of it have to do with, because obviously we've got the geopolitical risk out there, and right now, you know, we've got, the tension in Iran, and we know the Strait of Hormuz is a big, choke point for oil supply. Is it that governments are finally now saying, well, hang on a second, we've got natural gas availability, we've also got, obviously, the increased demand from AI and tech. Do we now look at this place moving forward and take away a little bit of that risk and focus more on this type of energy moving forward?
Yeah, and I think they're going to see more of that, particularly out of the US and also India. We've got huge demand coming through there. So I think that that's what we're set to see, price rises going forward.
Yeah, excellent. All right, now let's flip the script for a second. What are the biggest risks to the LNG story in 2026? Could that rising supply or potentially weaker or overstated growth cap the upside? I mean, I'm going to ask you because we obviously have to talk about the risks in this space as well. Do you see any of what is being stated as potentially dangerous, or really is this...
Well, there is a bit of a growing risk or oversupply in the market, and that generally obviously tends to push prices down, specifically looking at the US in general. But then obviously there is that bit of maybe lack of demand coming from Europe as well, which could influence the prices as well. So in terms of the geopolitical risk, there always will be, right? It's just a matter how much and to what extent.
Yeah, so watch that geopolitical space is Zoran's tip for now. But let's get to the good stuff and get into some gas stocks. And I mean, Janine, Australia, we've got plenty of good ones, and really the market hasn't caught on to just yet, so this will be good.
Yeah, that's interesting. It's a little bit like what happened when we were looking at different materials stocks, and then all of a sudden they took off and we said they would.
Mid last year.
Now we're seeing an opportunity here. So let's have a look at Comet Ridge, which is COI, that's the code, natural gas and exploration or production near Gladstone associated with LNG processing regions. So looking at what's going on, I mean, we can see, if we look at history, how significant some of these rises can be for this stock and how volatile it can be. So therefore, that's telling us straight away what type of stock this is and who should be trading it, who should sort of steer clear of it. And looking at the right-hand side of the chart, just to get a feel for that, the liquidity of it, it's quite illiquid, as you can see from the way that it displays on the chart there. But the opportunity is the pattern that's formed, because if we look back in history, it's rarely achieved this sort of pattern. There's some sort of consolidation. If we go right back to the start of the data, there's this sort of pattern at the bottom here back in 2016 and again repeated in 2021. But the size of this consolidation is what's really interesting me, and whether it's poised to make a break. And it could tie in, Phil, with what you're talking about in terms of the global opportunity with the geopolitical situation being as it is, and then all of a sudden we see another spike in some of these gas stocks. So just going back to have a look at the chart again, you can see that high there in January 2026 is sitting there just saying, you know, if the price goes through that, we could be on a bit of a run. If we expand the chart up, we can see that there's a nice trend developed, which is more orderly than typically we see in the past. So if we're looking at the run down this low here, we can see that it's sort of calm. It's sort of the calm before a potential break that we often see on bigger stocks unfold over that sort of time frame. But looking at the support that we can see around this price range, around that 10, 11 cents, it's sort of looking like it's poised to break out, I think. And even though it's a low price stock and something I wouldn't necessarily go for, if you're looking for one or two of these stocks to put in your portfolio, this could be an interesting one to follow. Well,
it's a good question you ask, and I want to get Zoran's opinion on that for your portfolio, because when you look at these kinds of stocks, I mean, it screams out to me anyway, that chart, these are cyclical type stocks. They move up and down. We know commodities do have that cyclical nature. So somebody with a super fund looking for growth in a portfolio, is this the answer? Even though what is happening, I guess macro level, or do they stay away from these kinds of stocks and pick your more stable companies that are performing?
I think duration of the portfolio, risk appetite that you're willing to take is probably a first thing that I'd consider here. I think Janine raised a good point. Yes, it's got a good solid foundation and support around 10 cents, but at the end of the day, this is a monthly chart and speculative stock. Before, when the half chart was actually on weekly basis, I look at the length of the bars and open and closes. To me, it demonstrated there is actually a lack of liquidity on a stock like this. In particular, if you're focusing on the opens and the closes here. But nevertheless,
great trading stock.
Yeah, but look, if you're willing to diversify and do a smaller allocation with the hype that it's going to go from 10 cents to $1, $1.50, then perhaps, yeah, it might be something that you'd consider looking at. But I personally would probably go a little bit more, something that's a little bit more liquid and can provide much easier access to getting in and out of the stock itself. Also, this stock is actually currently downtrending, and whilst it's actually broken a downtrend, it hasn't actually confirmed the reversal anyway. So I'd probably stay out of it until it can confirm the reversal altogether, because right now I'd be speculating on a falling knife.
Yeah, look, I must be the only one that likes this kind of appetite, given that the more, short to medium term, potentially traders type play available here, I think. But
I'm not saying no. I'm definitely saying maybe, but I'd need a confirmation that it's going to reverse and give me a good entry before he actually gives me the probability of that being a successful trade.
So technicals confirmation is what you're looking for.
Correct.
To trade these kinds of stocks. I know you're reaching to say something.
Yeah, super fund, I'd say no. It's an income stock for something outside of super, in my opinion.
Yep, great.
Let me challenge you on this. Like if you're a 25 or 30-year-old and you got a bit of money behind you in self-managed super fund, and obviously you got a long period of time ahead of you before you actually get into retirement, would you still consider this?
The funny thing is that there are so many stocks on the market, and if you're looking for 8 to 12 stocks, which is what we talk about, it sort of means that this one could be at the end of the list because there are so many good opportunities to choose from.
Sure.
I'll give you an answer. Yes, if you know how to trade. and I think on that point, check this book out. It's How to Beat the Managed Funds by 20%. It's free. You just have to pay the shipping. The link is in the comment section below. It answers a lot of the discussions that we're having right now in terms of how to build the right portfolio, what stocks go into those portfolios, and techniques on being able to trade stocks like just the one you've seen right now for some amazing opportunities and growth. But let's move on to our next stock, which is, Zoran?
Santos, much better.
Much better for you?
Yeah, definitely something that investors or traders should consider when looking at the portfolio, regardless of the age or risk appetite. It's generally considered as a good solid stock. I know there was a takeover discussion quite a while ago. At some point,
$8.
yeah, that's right. In 2025, that kind of fell through. I think the takeover came through Middle East, and it wasn't actually appealing. Overall, I also like the technicals as well. So if I'm looking at the technical side of things, I can actually see the $8 is providing quite a bit of resistance. Has broken through on a couple of occasions in the past. However, it didn't continue the uptrend. Overall, the stock is still consolidating and gaining momentum at the moment, whilst it has actually dropped off from the $8 mark and it's around $5 or $6.90 right now. I still see quite a bit of upside on it. On weekly chart, I would like to see a gap close here. If you can actually close the gap and reverse, then my first point of resistance or profit target would be around $8 level. If it goes beyond that, then I'd be doing more technical analysis, but could go anywhere from around $11 to $12 in a short term.
Yeah, cool. Janine?
We've been waiting for this stock to make a move for so long, and when the takeover announcement happened, I thought, you know, we don't want one of our big, you know, mining stocks like this taken over. But then to see it drop back as it did, which we knew that after a takeover announcement it's going to do that. Yeah. It's just normal. But then it's done nothing since. You know, it doesn't give me a lot of faith in it right now, especially it's nice and volatile, yep, and it's good short-term trading, but it's just a question of when. And Zoran could be absolutely right. It might be that you have to give away a bit to wait for it to go through all that level. Yeah.
Do you think that the takeover bid has hurt Santos from the point of view now that there seems to be some kind of acceptance that $8 is that level? That's what the company's worth. That's what they're willing to pay. So it's been a bit of a ceiling now. And if the market consistently buys into this, saying, well, if they only were willing to pay $8, why am I looking for further growth past that?
Well, if the company was never going to proceed with that because it wasn't enough, then that's the other side. There were commentators saying it's worth more than what the offer was, so long-term opportunity.
Yeah.
But also on the earnings side of things, if you consider the fundamentals and if the stock does well over the next year or two, then it might be considered as an undervalued stock. A lot of fund managers and hedge funds might be... That's right. Might be talking about it in the media, and then you create a FOMO, and then you get investors to actually come in and commit.
Yeah, it's a good point. Check out the fundamentals on these stocks because they are quite cashed up. But let's move on to the next one, Janine, which is...
Our next one is Omega Oil and Gas Limited. OMA is the code. Now, this is another one that's quite illiquid. You can see that same sort of personality on the chart where you have these bars that repeat the same price action over and over again. Quite volatile, if we just have a look at how volatile this one can be. And it's again thinking about who is this suited to. So this is a 55% drop when the market pulled back. This was around the time of the Trump tariffs. You can compare that to what other stocks did to give you an idea of how volatile this thing is. But just in a normal pullback, it's not uncommon for the stock to fall 40%. These are the sort of golden setups that you like to see on these type of stocks coming out of lows, and then, you know, consolidation again and then a break. So we've seen a bit of a consolidation. It's broken to a new high, and what's interesting to me is each time it breaks to that new high, it has a pullback. So I'd just be waiting for that now, wait for the consolidation. Could be a good little opportunity.
Yeah, Zoran, did you want to add anything on this one, mate?
Janine summarised it really well at the moment, yeah.
All right, great. Let's get to the next stock, Zoran.
Origin. I seem to be getting all the blue chip ones.
There you go.
Which is not a bad thing at all. Very, very good stock at the moment. Monthly chart reflects a long-term uptrend as well. Seems like there was actually kind of a triple bottom at $4. Obviously, that was a long time ago. Trend line or momentum seems to be going quite well and backing this stock as well, which is obviously a really good thing, especially the fact that it's actually gone back from May 2021. So we've got that momentum and long-term trend going for quite some time now. On weekly chart, I'd probably like a confirmation and a break above the top of $12.09. So there seems to be a major peak recently. If it breaks above those levels, then first target range should be around the $13 mark. But I think overall volume is picking up as well. If you focus on the weekly chart, we can actually see the volume is picking up as the price is consolidating. We've got a lot of bullish outside bars as well. I think it's looking really good as well. Again, Origin is one of those stocks that pays a decent dividend as well, and it's probably in top 50 on ASX. So that could be, you know, considered as a growth or income stock as well.
Yeah, I want to get your thoughts a bit more on this one because it's really interesting. You look at it and you see opportunity. Now, what is common? I mean, you're a former student, graduate at Wealth Within, and you're also at Blueberry Markets where you're the head of sales there. So you see traders come through all the time with different approaches. Yeah. Most of the time, from what my experience is, and I'm probably talking for you as well, but people want to buy really cheap and sell high. And oftentimes I'll see an opportunity like Origin that's been running for a few years and say, I'm not touching it, it's too expensive. Whereas you look at it and you go, well, there are a few key markers here to say this one looks good. Yeah. Is that something people need to think about? I mean, someone looking to get involved in trading that is probably thinking they see this and they go, oh, I'm going to throw this away, it's too expensive for me. Is that at their detriment, when you see stocks like this and the things you've seen?
It's a really good question because I think from a trader's or investor's perspective, you've got to actually take into consideration things such as duration, how long you're looking to invest. Are you investing for short or long term? Are you doing like just buying physical shares, or you're doing contract for difference, which is what we normally offer at Blueberry as well. And you can actually trade both directions. You can go long or short. So you can obviously take advantage of the market when it goes up or vice versa. It's probably considered a little bit more for experienced traders, right? Because at Wealth Within, we teach the basic concept of trading, like you buy low, sell high. But at the end of the day, there's no right or wrong strategy. And this is what we spoke just before, like when I was talking about the movement of gold and commodities in general over the past couple of months. Like a lot of good traders actually took advantage of that. Like I see on daily basis where people that are well equipped, well knowledgeable, they've got a good education, they're actually making quite a bit of money at the moment because the market has been one directional. And what we're seeing is actually a super cycle in commodities market. And I know you guys spoke about it for the past 6 to 12 months that it's coming and it's the last leg of the bullish market. But I feel nowadays like people are a lot more educated and equipped, which is a good thing because in the past I feel like, there wasn't as much of that education out there, and places like Wealth Within teach you those fundamentals. And if you can actually pick up and learn on the back of that, then it doesn't really matter on the time frame and direction that you're trading because you've got the knowledge and understanding of that.
Yeah, yeah. Well
I don't know if that sums that up.
Yeah, absolutely. Well said. All right, that wraps up our first round, and we have more amazing stocks coming shortly. But now time for our trending topic this week, which is, Janine.
It's BHP. Oh. And people tell me that I'm in love with that stock. But
surprise.
There are some giveaways, but
love-hate relationships at times.
Not too many giveaways.
The worst that can be is Rio Tinto.
All right, well, BHP has smashed profits, which means a deluge of dividends for shareholders. Before we take a look at where BHP's share price is headed, BHP's CEO Mike Henry reported earnings before interest, taxes and depreciation up 25% to $15.5 billion for the first half, which is a fantastic result for BHP. Looks like Mike will go out on a high. Geraldine Slattery is reportedly the leading candidate to succeed Mike Henry as CEO by the middle of the year, so some big changes ahead at BHP. We know copper has been a great story. Mike said this half marks a milestone for BHP, with copper contributing the largest share of our overall earnings at 51% of underlying EBITDA. And BHP are staying strong on iron ore with a record first half production and shipments, and we further strengthen our position as the world's lowest cost major iron ore producer. BHP raised its dividend to 73 US cents, or around $1.05 Australian dollars. The question is whether BHP can maintain its dividend above $1. With the full year result likely to be on track or higher, shareholders can expect to be splashed with cash later again this year. So let's take a look at what's next for BHP's share price.
It's always the way, isn't it? Great result, great outlook, and then you look at the share price and you ask the question, come on, can you keep going like this?
Do we start the violin?
I don't know. I'm sure you'll tell us.
All right. So look, I have talked about this in my podcast, so I'm hoping that you're all listening to those on BHP and Rio. If you haven't, please make sure that you check those out. Now we can see that BHP's only just broken above these highs, which has been huge resistance for BHP over recent times. And I actually didn't expect BHP to stay down for so long, but of course Trump's tariffs came in and that sort of held things back for a while. But, you know, you can't keep a good company down, and BHP used to be called the quiet achiever, and everybody took their eyes off BHP. But then all of a sudden, the light at the end of the tunnel in around that sort of June, July, August, it took off and look, has done extremely well. Now, there's a probability says that after a really good result comes out that there's a bit of a sigh in the market. Everybody said, yep, we knew that was coming. And then the price pulls back for a little bit before we get the next run. But I'm sure the market is going to get excited about the results for the second half when it gets closer to that time. So, but we have to remember too that we're in an election year. So that could change things later in the year and slow things down a bit. So, but I still expect more good stuff from BHP. Short term though, let's take a bit of a look at support on the downside if it does come back. Well, you can see there that we've got this nice support and resistance level across here, which is what BHP's tackled. It may come back a little bit below that as part of the recent move, but if you listen to my podcast, I am talking about further great upside for BHP, and you can just see it when you're looking at the chart, you know, with a break like this, the potential that's there for BHP to go on. So, you know, I've been waiting for this for so long. It's been sideways now since 2021, and this is one of the things that's held our market back. But if we can see our financials moving on and our miners moving on, that should push our market further ahead while the tech stocks have taken a breather, or do take a breather. So we've seen, we've got the potential for BHP to move up into the 60 and 70 zone. But as I said, make sure you check out my podcast to find out a bit more detail behind that.
I'm sure it's juicy.
How many traders that, you know, we work with are so excited about this stock, you know, have been trading it to make a profit as it's been rising?
Yeah, I mean, we're seeing, as I say, guys, check out those testimonials, because a lot of the stuff that's happening, they're looking at these material stocks, big, good stocks that have been unloved, and they are absolutely nailing it, which is really exciting. I mean, when our market, which is predominantly driven by materials, we're a mining country, when that gets hot, they're the best years for us in the Australian stock market. So I think you're itching to say something about BHP. Are your thoughts the same, 60, 70 bucks? Do you see strong upside?
Definitely. And I just feel like right now the $50 mark is actually quite an important round number. And if it dips a little bit below, I wouldn't be too concerned, honestly. And I think it's probably a good entry to top up or get in. But again, there's rules around there. But one thing that I find overall important in the market right now is there's so much overvalued stocks generally in the market, like whether you're focusing US globally or whether you're focusing in Australia. So the fact that stocks like BHP Billiton and those heavily big market cap top 20 stocks are actually starting to outperform the market, what you're seeing is probably going to see accelerated growth through rotation, because fund managers have a limited access to so many stocks in Australia on ASX because of the liquidity and a number of other reasons. So the fact that something undervalued like this comes on, it should provide us
green lights.
Should provide the green lights. Now, I'm not saying like providing personal advice here, but what I'm saying is the stocks that are generally undervalued a little bit in this phase of the market will actually outgrow and perform quite well. So I would probably say BHP is one of those stocks.
Yeah, in a pond when there's not many fish.
Correct.
Everyone goes for the, I think we understand what Zoran's saying, and I completely butchered that analogy. But anyway, if you want the skills to analyse stocks just like you've seen tonight, visit our website, wealthwithin.com.au. But now let's get back to our topic and get into some more stocks. Janine.
All right. Now we've got a smaller energy stock with gas operations that can benefit from higher LNG and gas prices. What's really interesting right now is it's coming back to test this little sideways consolidation here. Again, we can see the trademark liquidity, and it's really important. One of the things when we talk to students about understanding how to read charts, that's one of the first things. How do we actually read a chart and understand what's going on? It's fundamental to actually being able to trade well. And you can tell a stock's liquid or whether it's illiquid just by looking at it, not having to look at the size of the company.
It's funny you say that, because the other day I was talking to someone and they said, why haven't you got, you know, indicators on your chart? And I was like, okay, so what are you trying to understand? Like, I mean, you said it perfectly. That price data alone, that's the raw data. If you can read the language of the market, that's going to tell you pretty much everything you need to know about where sentiment sits. I said, what is your indicator supposed to tell me? Well, it's an average. Okay, so am I going to be more successful trading an average, or am I going to be more successful trading at optimal price levels? Oh, I never thought of it that way. Yeah, and the average is going to keep pushing you into those types of scenarios where you're looking to be on the outliers rather than with everyone in the average, right? Anyway, I thought that was interesting.
So you're saying they're seeing what everyone else is seeing as well, not just...
Well, I'm saying it's so important to be able to read price, as you said, in its raw form and use the information to really understand what it's telling you, more so than get stuck into putting on 50 million indicators on your chart to then not make any sense of the underlying information and focus on what this variation of price is telling you. So,
but indicators are historical anyway. If you're looking at the current price level and applying price,
lagging.
That's right, the lagging. So if you're applying the price analysis on the current levels, that should give you a real-time formation as opposed to something that's telling you what's happening over the past 50 days, because you'll be able to see that on the chart anyway.
Yeah, exactly.
So, like, I mean, I don't mind some indicators, but like I don't put too much emphasis on it. I'd rather do my own analysis and, as you mentioned, put it as an outlier to give me that sort of 10% confirmation before I actually make a decision whether I want to get into a stock, you know, that's over 200-day exponential moving average or below it, if that makes sense.
Yeah. There's a place for averages, but I mean to project and to get the optimal price, it's...
Well, you got to look at the current. You got to look at the historical, current, and future as well. What it's going to do.
That's the big one, the future.
The future.
They're the things we teach. So please go and check that website out, wealthwithin.com.au. But I think there are more stocks. Is that it?
Did you want to finish off this one?
Oh, sorry. Yep.
All right. Okay. So the interesting thing about it is the fact that it's come all the way back down to this bottom, which is fantastic to see a stock that's actually doing that. And whether it can actually hold at around these levels is the next big question. So there's always a potential for it to take out these lows and continue lower. And I guess, you know, you don't want to try to be first to the party in a stock like this. You want to actually be in there once the trend's confirming that it's starting to move back up again. So we don't have that yet. And I think the fact that, you know, a lot of people will have jumped in here. There may have been some news that came out in July, and so that's caused the market to push it up. But if we expand that up, you could see it a little bit more clearly. Since then, it's been sold off. So it's just, what was that all about? You know,
I mean, it's come back to close the gap, which is fine. But like, if you expand longer in this chart, like for me, this is like massive red flag, and I'd run from this stock, to be honest, because historically it's been in a downtrend for 20 years or just under. If you go back to 2007, 2008 global financial crisis. Now, for that sentiment to completely turn around, it does take a lot of time, which means obviously fundamentally something that is very, very wrong with this company or business in general. And look, maybe it is doing so because we can see that it's got a strong base around 0.3 of a cent. But at the end of the day, I would like to see a major reversal on this stock above 15 cents or so with a heavy volume and some good news to even consider it.
All right. Interesting.
Good thought there.
Next stock?
All right, Woodside. Now you can see Woodside still consolidating. Do we just continue to play the same story about Woodside? I'm starting to get a little bit bored of Woodside, just waiting for it.
I think what's important is if we can just outline some forward projections on Woodside. If it does break, where can it get to? Because I think that helps you know, people watching to say, okay, where could this stock truly get to? This is one of the biggest LNG players, you know, in the world.
It's a great stock as well.
You're right.
Yeah, fantastic stock.
And so at some point, if this does turn and break out and get going, it could provide some massive gains for people. It's just, when is that moment and what's the outlook like?
Yeah, okay. So first thing to bear in mind is, okay, what's the level that you would be no longer interested in it? I think sort of to put that in reverse first. So if it goes back below that red line, to me, forget about it for quite a while, unless it reverses up strongly again. Because sometimes the way the big players are working is they're selling things off, pushing it down to a bottom, and then all of a sudden buying back in, and it goes rocketing back up. So why does it do that? Well, that's a whole different story. However, let's have a look now and see where are the important levels for this one if it does make a move, because you need to be ready for it. So even though I say, you know, I get bored with it, it still has to be watched regularly, and I'd suggest be watching it every week, just set alerts. The great thing that we have with our software is it does set alerts to tell us when things are taking off. So, but this is the potential, Phil, in terms of the upside on this stock. Short-term potential is probably a little bit lower than that, but it's a 40% upside to that level.
But that's the point, isn't it? When you, like the psychology behind things. I know you spend a lot of time with traders. The second that creeps into your mind, I'm getting bored. Oftentimes that means people look the other way.
We hear it all the time.
You know?
We hear people say that they're not, in the market at the moment because, and these are people who haven't done our courses, but there are people who say, I'm not in the market because of this, this and this.
Yep.
And it's probably because they just don't know really what to do.
Lack of knowledge.
Well, because when you look at Woodside, for me, I mean, even though it may look like it's doing nothing, you need to be watching it like a hawk right now because that moment can come tomorrow.
But it's actually doing a lot.
You know,
like
if you know what you
it seems like it's not doing much, but like when you have a look at the chart from the get-go, like I can see like so many opportunity here.
What's about to happen? Yeah,
that's right. Like I mean, not set, it might be a false breakout and stuff, but what Janine said, like the key entry level, that 25.84, if it breaks above that range and clears that major most recent high, then I would absolutely take into, like, that would give a bullish sign definitely. For me personally, in terms of the downside, I would still probably go look at this trough here, which is around the $19.50 or $20. So I'd probably give it a little bit more room, breathing space, just because it's been consolidating for quite a lengthy period of time. But if this is the major trough here at $18.61 and it's starting a new uptrend, it breaks this through this peak, then what Janine said makes perfect sense. There's potentially 40 to 43% upside in this stock.
Yeah, because then the flip side is the ones that get bored and forget about it, they'll come back in a few months once they hear in the news it's up 20%. And then
that's what happened with BHP.
And do the FOMO trade.
Yes.
And the FOMO trade is not a good way to get involved. Yeah.
Yeah,
and then
if
it hits
interesting as well, because a lot of students don't realise that when we teach them, they can actually work out when is it too late to get in. People often say, is it still okay to get in? And that used to be one of the questions that came through when people were sending emails to me when they were first learning was, the stock's broken out, it's gone up this amount, is it too late?
Yeah.
And then they realise that they've got the answer because they know where their levels are overhead and they can work out whether the downside risk justifies, the upside justifies downside and everything. But people who don't have that ability, they're just sort of throwing it in the wind, aren't they?
That's so crucial. I mean, you really listen to that because that's pretty much a lot of what, when it comes to decision making, and like you said, is vital to know. And if you don't know it, geez, I think you should. Did you want to add something on that?
No, that's pretty much it.
Cool. All right, I think we've got two more stocks. AGL, now this one, big news the other day.
Yeah, big news.
What do you reckon? Is it finally waking up?
Maybe. Again, what we mentioned previously as well, a lot of stocks get put on the back burner, and then eventually when there is a good news or when it's too late, people start looking into it. I'm looking at the key level here in terms of the support, which is, I'll just fix my mouse, around $8 once again. On monthly chart, it actually looks really, really solid. The point of resistance that I'd be looking at here is somewhere around $12.60. If I'm looking at the PRP tool or percentage, potential upside is 16%. So it's not that extravagant at the moment, but if it breaks that level, then we could be seeing next level around that $16 mark. On weekly chart, like obviously there's been a massive influx and volume coming through, so it's broken some key entry points for me personally. Yep. I would like to see stock maybe come back and retest around that $10 mark. If you do get a bit of consolidation and a bit of a pullback, I think a lot of people would actually enter on the FOMO because a lot of people would actually miss out. But all in all, I actually like this stock. I think it's done well. It's consolidated sideways for quite a lengthy period of time since July 2023. So there's been a good sideways consolidation. It's gaining momentum at the moment. It looks like it's broken through on price and supported by volume. Surely there's some good fundamental news that's come on the back of that as well, and hopefully we see a little bit more upside.
Are you a fan of, because we are in earnings season, so I just want to get your thoughts, especially this one just reported. Are you a fan of waiting to see what happens, a couple of weeks down the track with earnings? Because obviously things get wild around earnings season. Does that give you the biggest clue in terms of whether, it was good or bad and now it's time to get in?
Fundamentally, it's going to give you... It's going to give you a good picture or analysis in terms of how the company is actually, whether it's healthy, performing well, profits are going good, earnings are doing well. But overall, I don't like to enter stock just like this on the back of a single announcement, because I feel normally there is a lot of emotion involved and there's a lot of FOMO. So I would always wait for a few weeks for the stock to actually consolidate and hopefully settle down. And then you get to see the real movement, whether it was actually pump and dump or whether it was actually a genuine move in the market.
Yeah, good advice. All right. Did you want to add anything on AGL or get to the next?
I thought it was really interesting what he said about the pump and dump, because that is the reality, isn't it, around this time of year?
Yeah. All right. Next stock.
All right, APA Group. We're looking at a stock that's recovered from this low in 2025, February 2025. And what's interesting is it's come back to test where it was really struggling for some time to get through an important level here across the chart. So it took a long time, went sideways, eventually got through and then came back. This is the classic scenario that we see with stocks, and then sometimes you can buy on the breakout and then that profit gets wiped away, and it's a question of to stay with it or let it go. And I was talking to someone about this the other day. But at the end of the day, you have to have decided before you get into it whether the risk justifies doing so. So at the moment, you might have a trailing stop loss in a really sensible position under here. If it went back below this low here, I would just let it go. And if it continues to trade up, then just stay with it, because it could break through that $10 mark quite easily. But at the moment, I'm just quietly excited about the pullback that's happening here.
Yeah. Did you want to add anything on APA? Similar thoughts?
I mean, similar thoughts. The only thing that I'd like to add is that looking all the stocks within the sector, you can actually see a lot of common movement and very similar moves on the charts, which is obviously demonstrating one thing, that the majority of stocks have actually created a major low and they're reversing. They're in strong uptrends at the moment, or they're actually consolidating sideways at the moment before they break out.
Exciting stuff. All right, now on that point, which one is your favourite?
Well, Janine, ladies first.
I would have to say probably this one, if it does find support around this level and then take off.
Woodside.
All right, that was quick. APA for Janine and Woodside for Zora. Now, moving on shortly, we're going to get into our hot stock tip, which has had some big earnings come out today. But first, let's answer your questions. Adam writes, hello, would love to know your thoughts on the recent Virgin Airlines IPO. I'm personally quite liking this ticker from a standpoint of it being the second largest airline in Australia and thinking of getting into it, as I don't think it will go away anytime soon. Ooh, all right. Virgin airliner not going away anytime soon?
Looking at the chart, definitely doesn't look like it's going away right now. I don't know when it's going to report, but this week up could be some sort of indication of what's going on. I would stay with the news, whatever that is, and just keep track of it. But looking at this one, if I could get my mouse to do what it needs to do, I'd be drawing a line across here. And around that sort of 350, 360, we can see that's an important level. I wouldn't go anywhere with travelling on Virgin, the stock it is, unless it gets through that level.
Yeah, 350. Zoran?
Pretty much same view.
Yeah.
My concern with IPO stocks is always there's not enough historical data that you can actually do proper analysis.
Yeah.
So you got to rely a little bit more on the fundamentals of the stock and uptake of the IPO and whether it's oversubscribed, undersubscribed, etc. But chart-wise, I agree with Janine. 350 is a key level.
That sounded painful.
Looks painful.
Well, oftentimes stuck in the middle there doing nothing. But there you go, 350, watch that level for Virgin. Now, Sean's email is next. AGL has traded sideways for a number of months and has recently gone vertical. Is this dangerous territory, or would you let it drop back to around $10 or fill that gap just above $9? I don't own the stock, I'm just waiting for an opportunity. Now, we covered AGL in broad detail. I think the important question here is, when someone asks, do you think would you wait for it to get to a certain level? Automatically for me, that pricks up my ears because you're expecting something now. What if it doesn't go to $10?
Yeah.
What if it doesn't go to $9? Let's answer that. Do you think it's going to go to 10? And what if it doesn't? What should he do? Or $9? I mean, either. Zoran, you want to take this one?
I agree. Like you got to have like both scenarios. So like, what about if it continues to go up? What do you do then? Do you just let it go? With the hope that eventually it's going to come back and retest key levels, or if it does come back, what's your entry point? But there's nothing wrong with scaling into the positions and scaling out of positions. I think a lot of people underestimate that quite a lot when they trade. So, if you want to get into the stock, you feel there's a bit of a FOMO, and you want to cover some position in case it continues to go up, well, it's going to give you a good base, right? Because you're in it. And then if it drops back and you still believe that overall it's a bullish stock, it's just a short-term pullback, before it actually continues to reverse and go higher, then you can always top up. But you've got to think about all these things.
Yeah. Janine?
I mean, if you learnt with us, you would know that if the stock drops back, you're not going to be trying to buy it there. It's just not a good idea, because if the big money's dumping it, why are you going to be the sucker that actually gives them the liquidity to, fill their positions? You don't want to be doing that. So if we go back to the chart and we have a look at that $9 level, just to make a bit of sense of that, you can see there that it struggled to actually hold above that, and it's finally done it. And that to me is it's great that you've mentioned that level, I think, because it is a really important level, but it's well clear of that now. I just think that, it needs to make a higher low. Yes, you're right. It should come back. We need a bit of a test of that, but keep an eye on what's going more on the monthly chart, because that's the important thing. We can see that there's sort of a really nice shape that's formed here from a pattern point of view on that monthly chart. And it did break below it a little bit, but now it's trying to get back above it. So it still needs to really push through there. So I wouldn't be wanting to see it come back right now. Sideways, yes, that's okay. And then to follow the angle of this line would be great.
Yeah.
But what about if it comes back to, let's say, 950? Like, would you still say it's a no-go and no entry?
If you had a set of rules and the rules said my entry was above, let's just say, for example, that you put your head in the sand and you missed it, and the entry was there for whatever reason. It was there.
Yep.
And then it came back into that point. I'd actually want to see it turn around and push back up again first.
But does that mean you would enter at 1049, or you would potentially enter on some other rules and other confirmations lower around 960 or 970?
Good question. I'd rather see it come back. If it does come back, and if it does go back below that line, I'd rather see it just dip below, even if it goes down to 930. And then as long as it comes back up strongly through it, then to me that's enough. Yeah.
And I think that there's also the question in this is how far down does it need to go before it changes your view on things? Because if the stock is really bullish from here, a significant move down, and what you're potentially not thinking about is just have a look at the general volatility of that stock. A move back to $9 breaks that. So the question is, okay, is this a sign of something different? Like, for example, I can't remember the stock I'm thinking about. Might have been CSL at some point when it started to move up out of this range 5-6 years ago, pulled back, and then everyone's thinking, okay, well, it's at a level where it's cheap again. But you're getting information that if this is bullish, it shouldn't be falling that far. And so...
there is a particular price point and percentage that it should be dipping, like if it's a bullish stock, that's right, to support the thesis and bullish move, that's right.
Yeah, good points there, Zoran. And look, if you are asking those questions about what Zoran just mentioned, please go and check that website out and go look at the share trading and investment diploma. That is really why we do this, and to be able to answer those questions so that you can take your trading to that next level. But let's move on to our next email, which is Victor. And he writes, you've talked about psychological levels before. How do you determine those? Is it mainly just the big round numbers, or is it based on your years of experience? CSL is hovering around $150 and it feels it is at one of those levels. Now, this is, again, another interesting question, CSL being hammered. First, what do you think of when people say psychological levels? I'm sure you're the right man to ask. You see this all the time with traders. Is there a thing? And how does that apply to CSL?
I mean, there is key levels on the chart, and I do take into account that you could, like, obviously trading is very psychology based in terms of supply and demand. So I do agree there is that element of it. I've got a couple of stories on this one before we actually get into the chart. So first one, I spoke to a client probably, I reckon it would have been, well, this was when the price dropped quite heavily. So I'd probably say August 2025. And he's telling me when the price actually deviated and went downwards and broke through the key support level of $225. So I spoke to him and he just said, oh, I'm building my equity portfolio. And I said, like, he's a Blueberry client of mine, high value client. And I said, oh, fantastic, excellent. What stocks are you looking at? And he's like, oh, today I loaded on CSL. And I said, oh, okay, that's interesting. And I said, why is that? And he goes, well, didn't you see the announcement and the price actually dropped quite aggressively? And I said, okay. So it took me a little bit more through it. And he goes, well, the price dropped. I thought it was actually, I feel like it was actually quite cheap. And hence I actually got into the stock and I think long term it's going to be okay. Now, the first thing that came to my mind was like, just before, because the price dropped or broke through a key support level, that doesn't mean that it's going to reverse and continue heading higher, because if you do have a look at this stock, it's been going sideways for an exponentially long period of time. And the all-time high was back in February 2020. So the fact that it actually broke through this level here, which was the low back in October 2023 and continue heading lower, but let's assume this was actually a monthly chart of August 2025. We've obviously got a long-term downtrend in play now. And to me, that's a red flag from the get-go. And I speak to these people like on a regular basis, because people make a mistake between cheap and undervalued, I would say probably. Or considering the technical aspect of trading, or cheap and confirmation.
Well, you can be cheap and still buy at the wrong time.
Correct. And I think that's exactly the point, because top 20 stock pays a good dividend yield, but the price is actually dropping quite aggressively. And I was thinking to myself, you definitely lack some education. I can't provide you with the personal advice here, but my view on the CSL was, well, it's broken all the rules. It's a red flag everywhere. Right now, it's a falling knife. It's definitely not a stock that I would consider buying right now.
But so many people do it.
But so many people do it. The other point, and for me, it's an absolute no at the moment. I think actually it's a falling knife. I think this stock probably has a lot lower to go before it can actually consolidate, because it had a strong upside run. I mean, I'd need to do some extensive price analysis, but I'd be probably looking at least like 125. I mean, just looking at the chart here, because it's broken all the rules. It's creating lower highs and lower lows. Like, I mean, there's a bear sentiment to it now. Like, you know, like traders or investors are probably looking to get out at any point in time to scramble some gains or break-even positions.
Yeah, look, it'd be nice if the, I think I'll just leave it at this. It'd be nice if the market were so simple that you could just buy and sell at each round number, but there's way more that goes into that, mate. So unfortunately, you know, do some more analysis and get those levels right from that chart is the most important thing, rather than just looking at round numbers. But anyway, next is Stavros, and he writes, I've been following Cochlear Limited since November as a relatively predictable long-term investment, but the past month has been quite volatile. Do you see this recent pullback as a short-term outlier, or has something fundamentally changed in their long-term outlook for the stock? Now, Janine, again, very similar to CSL.
Yep. I guess one of the things that we teach is trend lines, and to me that's a really critical thing, because it tells you, you know, where is a stock likely to gravitate away from and back to at some point.
And it's not just a line to...
No, it's not just a line to buy and sell, it's a line to tell you something more serious is going on. And so, you know, CSL would have had that line there in the sand ages ago as well. And now we're talking about Cochlear as having that line in the sand, which it did some time ago. But then all of a sudden the news came out and it reversed here. And so they suckered people in to the stock at that point, and it took off for a little bit and then got sold off. So I just think this is a classic case like CSL, where people are trying to buy it now because it's a good company. It's got a good story, good fundamentals, but now it's being sold down by the market. So the whole healthcare sector's been sold down now.
Yeah, but I also mean, what I meant before from the question was in terms of drawing a trend line. People see on the show, we draw a line or a trend line, and they think, okay, well, it's pretty easy, just connect a few points and there's your line.
Well, that's not the buying and selling line. That's just
But even
a
the application
guide.
of it, there are so many metrics that go behind why that line goes there, how that line goes there, is that line the right line, is it valid, is it all these kinds of things. So, it's important to distinguish that because people can watch this and say, okay, well, I know how to draw trend lines, it's pretty easy, but there's more
Yeah,
to
I
it
think
than
that the book explains it, and that's one of the things that really excites people about the fact that once they see how that works, and then they get a bit more knowledge, and then they build on that a bit more, and then they start using it, and they've got someone there to guide them through that process.
Yeah.
That's really powerful.
Yeah, great. Yeah, you've got to do something right.
Yep.
Right. But anyway, our next email comes from someone who forgot to put their name on the email, actually. So please, next time, we'd love to see who this is from. But the question is, can you take a look at Augusta Minerals? They seem to have interesting projects. Now, by the way, you shook your head. I want to go to you, Zoran. Augusta Minerals. What happens when someone says they look like they have interesting projects? Like, what does that supposed to mean?
What are these projects like? How much are they costing? Have they found anything? I mean, this looks more like a speculative stock. Look, I don't know whether this person actually is invested in the stock or not, but just having a look at it on the face value, like first of all, there's not enough historical data. So the stock, went from as high as 36 cents to 3.6 cents. So there's been a magnificent drop in price. Obviously, I would imagine there was a bad fundamental news or something that came out. In the meantime, stock is actually consolidating for quite a bit of long period of time, which is not a bad thing. Like that's probably one positive that I'd like to take out of this. And it's found like a good base and good support, but like the volumes are shrinking. There's not much volumes on this stock. Like, I mean, the price is obviously reversed again and it's hitting the key support level. It's probably likely to break that major low of 0.03 cents. I mean, it's a gamble. Like this is a punt. Like this is literally rolling a dice. And I've been there as well. Like this is exactly what I used to trade for the first few years before I started doing wealth within course, because I'm not having a go at this person, but you get into the stock with a hype that you'll put $5,000-$10,000 and something magic is going to happen and you'll make millions or hundreds of thousands of dollars. That doesn't happen. It happens on rare occasions. Like I worked for a broker for the last 8 years. I've been trading for the last 15 years or so. Like it can happen Cinderella stories, but it doesn't happen very often. And that's a luck. That's not a
skill.
That's not a skill.
Well, let me ask you this, because you obviously deal on the retail trader side, and you also you speak with hedge fund managers and that. But
we got the institutional arm as well. So we deal with people that trade enormous amount of volume as well. So.
And that's my question, because this person is obviously retail. When you look at a stock like this, I mean, hedge funds, for one, they need to see a lot before they even touch a stock like this. But to have the information to know, because I'm going back to the point when the email said they've got interesting projects. But from an institutional point of view, they're dissecting those projects by having men on the ground, looking at those results, speaking to the CEO, doing a whole bunch of stuff before they even think about allocating a dollar. Yeah. Even so, on the retail end, one, you don't have access to that type of power in terms of information. And two, does it even matter if you know how to get in at the right time when the real money is getting involved? And so, having none of that at a stock like this at this level just makes it almost, like you said, risk. Impossible, a gamble.
Yeah. I mean, you can get the timing right occasionally because something can happen where you buy the stock and it just goes in your favor. It comes out with an announcement week, 2, 3 weeks or month afterwards, and there is a bit of a buy the rumor, sell the fact. Bit of volume is backed by the price, and you get in. But to do that consistently and outperform the market on such basis is exceptionally hard, and it's draining too. Yeah, like it's emotionally very draining.
Because you're sitting a lot doing with nothing and
just hoping, you're not sleeping, you're always watching.
Tough way to live. All right, well, let's move on. Now time for our hot stock tip for the week. Zoran, what have you got, mate?
We've got Sims Metal Group. Now, before we get into the chart, Sims released their half-yearly earnings and posted a solid half-yearly result with underlying EBIT up 66% to 121 million, predominantly driven by explosive growth in the tech recycling division. While their traditional scrap markets remain mixed, profits rose 71% and the dividend was lifted 40%. signaling strong operational momentum. Now let's get into the chart. Yeah, so looking really good at the moment. Really, really good. Monthly chart obviously is confirming an uptrend from the lows in July 2024, so that's been very solid. I can actually see some key levels being broken as well. I'll just push this a little bit up. So we can actually see that the price is actually broken through quite significantly. I'd love to see a break above these highs of $22.80 in April 2022. But all in all, it's looking really solid. I'm also seeing a reversal pattern as well that we teach. I believe it's in module 4 or 5. I've forgotten now, but the stock is in a long-term or medium to long-term uptrend. It's looking fairly bullish, and the next level of resistance I probably don't see up until 23.20, and then probably looking at $30 mark. Weekly chart is actually demonstrating also a strong bullish run. Always like to see volume support that. I think that's always important because you want some of that institutional higher end of town actually backing the stock as well, which means it's smart money that's coming in, not only retail money. So, the results are backing the price is obviously, appreciating. I think it's good.
Great. All right. If you want more from us, check out our video, ASX Tech Stocks Cheapest in the World. Time to buy.